Audio check, test, test. We are good to go. So good morning. This is October 11th of 2024. Let me just update the Discord telling everyone that we are live. Good to go. So good morning. This is Alrighty, good morning. Today is October 11th of 2024, and today we have PPI. So PPI is our producer price index report. It is set at 1.6%. Previous was 1.7, so we're expecting a 0.1% drop. Yesterday we did have CPI. CPI did come in, I believe it was 2.4%. Expected was 2.3%. We'll go over that a little bit just in a bit. But you can see here I'm using Financial Juice, and this is the number that we're looking to see. So 1.6%. So this is where we're going to have our eyes. And that report is in roughly 3 minutes. So right at 8:30. So we are live in the Discord if you wanted to join that. That probably won't have the delay. I know YouTube has delays, so if you wanted to join that, the link is in the description. But we're about 2 minutes away from the PPI report, and then I'll go over some charting with you, and we'll go from there. Drink coffee. So about 30 seconds away from our PPI report. Again, expected is 1.6%. So that's the number that we're looking to beat. Put that here. So again, 1.6% is what we're looking for. And we got about 20 seconds now. So we did drop roughly about 100 points overnight from our Asia session high to our London lows. All right, so 1.8%, so that's actually worse than expected. That's not really good news. That's why you can kind of see that initial drop right there. So let's see if we can end up getting a break at our London lows to personal to the highs. 1.8%. So both PPI and CPI came in worse than expected. Um, yeah, that's crazy. So CPI again, it did come in at 2.4%. Expected was 2.3. So it's worse than expected, but it's still lower than previous. PPI was actually higher than previous and worse than expected. So it's kind of interesting to see. Let's see what we can get off of this. So far, a nice push, possibly get up to our London highs here now. Surprised we didn't get a deeper push lower to take out these London lows and then get a push higher. But this is good. We should, let's see. Don't really have much of an RTH gap here. It's roughly only like 20, what is that? Not even now. So like 13 points. So not the best there for the RTH. So today's outlook, I'm just going to go over the CPI report a little bit with you guys. I'm not going to go full in depth of it. We do have a separate video on our YouTube, basically explaining the whole breakdown of the CPI report and how to read it. Then I just want to go over some levels on the dollar, some levels on NASDAQ and S&P 500. Then we can go over crypto a little bit, looking at Bitcoin and Ethereum, and that should end our stream for today. So let's have a look at our CPI report here. So yesterday, you can see the CPI report increased by 2.5% before seasonally adjusted. So let's look at our summary here. So I believe, yeah, 2.4%, sorry. So I was looking at the wrong one. So it increased by 2.4%, and that was 0.1 higher than expected. So expected was 2.3%, and we saw 2.4. So that's why it acted as a negative catalyst early in the morning. So if you look at yesterday's price action, you can see we had a massive dump right in the morning and then end up reversing it. So I'll show you here. So you can see this massive drop here right at 8:30. That was because it came in higher than expected. So similar to what we saw today, right? So on that initial drop at 8:30, but PPI is a little bit stronger than CPI's report. But again, did come in higher than expected, but still lower than previous. So previous was 2.5%, and this one did come in at 2.4. So it's not terrible. It still shows inflation is coming down to our 2% goal. These are all of the items that the inflation report was affected with. So you can see our biggest hit was in our energy sector, a little bit in our commodity sector, so no new vehicles, used vehicles. Our highest I'm noticing is our shelter. So shelter, transportation services, and medical care services. These are still relatively high. That kind of makes sense. So like usually when we get our new home sales and pending home sales, they usually do come in higher than expected. And just the entire housing market in the States it's booming right now. So that's definitely what's keeping our inflation a little bit higher. We do have, so if we go down to this PDF, this was last reports. So you can see this one was the report that came out in September 11th in specific, and that's when CPI came out at 2.5%. our current report has been knocking off, well, it did knock off this 0.5% catalyst here. So we're only taking into effect all of these and then plus our new month-to-month report. So knocking off this 0.5 definitely is what caused inflation to drop a little bit more. But the reason why this specific report that came out yesterday is a lot more, I guess, impactful compared to the rest was because it's our first inflation report after a Federal Reserve rate cut. So we saw a rate cut by 50 basis points, and that was the first time we saw a rate cut in over 2 years. So it was very interesting to see how this specific CPI report did come out, and it still came out lower than expected, or lower than previous, higher than expected. Um, so that was quite interesting to see there. To be honest, I was expecting it to come in higher than expected and higher than previous, so higher than 2.5%. But came in 0.1% lower than previous, which isn't terrible, but um, in my eyes, I don't think inflation is really dropping as much as they would have liked. Because again, their goal is 2%. But again, I'm not the Fed, so I can't really judge how they'll look at that. They're taking it report by report, and they've been saying that for 2 years now. So if you want a whole entire breakdown of how to read that CPI report, this is the bls.gov. This is a free website for everyone. So when you go into the US BLS right here, you'll be brought to this page, and the first report is usually the CPI down here at the bottom. When you click on that, you'll have two different summaries. So you can look at the whole word summary here that we were just looking at, and it shows you all the items that affect inflation. So all items is just our overall CPI, and all items less food and energy is our core CPI. This is what the Federal Reserve can affect. So obviously they can't really affect food or the energy sectors. They can only affect all of these items here. So that's our core, and then that's just our normal CPI right there. Yeah, and it basically gives you the entire breakdown of the CPI report. So I do have a video of that on the YouTube that is in our intermediate course. You can find that in the playlist. Yeah, that's basically the whole breakdown of our CPI report. Um, yeah, you can start to see this negative effect that PPI is having right now. So we kind of got like a manipulation move to the upside, and now we're kind of seeing that real move to the downside here. We could possibly come down and take out this London low here, which would be nice in my opinion. Kind of get that sweep right there, and then look for a shift higher right around market open. Have a sip of my coffee. Alert set right at this London low here. You can put an alert at these highs, just in case it wants to come back up. But unless it breaks this high or breaks this low, this is kind of just in a range right here. So you can see we have an inside candle right here on the 5-minute. And we took out our data high and starting to get a sweep lower. So we should start to come down for our data lows now. And that wasn't too bad of a move. Roughly 40 points. So if you want to be scalping that, sure, go ahead. But there's going to be bigger moves later, I'm sure, when market opens. But before I head into the dollar, let's see here. See, our RTH gap is looking a little bit bigger now. So when the market opens, there's going to be this massive gap from yesterday's close at 20,423 and a half versus our price right now at 20,370. So there's going to be a decent gap there. Let's see what that is. Roughly 50 points now compared to the 13 points that we saw a little bit earlier. So yeah, we should, yeah, so that's our data lows there. And this is kind of just like the setup that we like to play, and that's kind of the setup that I played yesterday with CPI. So when you take out a data high or a data low and we reclaim that range, we'll end up targeting the opposite side of that candle's data range. So since we took out the data high here, reclaimed that range, and the range that I'm talking about is the PPI or this CPI candle or any news event candle, whether it be NFP, FOMC, CPI, PPI, GDP, whatever it is. That is our data high and data low candle right there. So you can see whenever we break one side and reclaim that range, we'll target the opposite side of that range. And I'll kind of show you what I did yesterday with CPI. Oops. So that over here. So CPI candle right here, highs, and you also had your lows. So we ended up breaking the low of the CPI candle. We reclaimed it, but I did notice that PA was a little bit choppy. You can go see on my Twitter. And I did mention that in the pre-market, a lot of things were chopping up to fake people out once when the market opens. And you can see roughly around here, I believe it is. Yeah, the market open came, we swept out all of these buy stops right here. So if we mark out this high, we want to mark out this low right here. I'll show you exactly where I took my trade. But before I get sidetracked with this, you can already see now that we took our data lows are starting to come back up. So we could start targeting the highs again. So right when market opens, we take out all these buy stops. So anyone that has went short here previously, right, probably had their stop resting just above there, came, stopped them out. All right, now we went to target sell side liquidity. So a bunch of people that went long here, right at open, right, where would they have their stop? Either at this low right here, or they had their stop loss resting at that low. Okay, came, stopped all of them out. So now we've stopped out buy side, we stopped out sell side, and it was time for the real move. I tweeted at 9:51 or 9:52 saying that the real move is now to occur since we faked out a bunch of people. And this right here at 9:54 is exactly when I took my trade. And you can see it took roughly about 2 hours to get back to our data highs. So remember, this candle was our CPI high and our CPI low. And whenever we take one side of that data range and reclaim it, you target the opposing side of the range. So you can see we ended up hitting it, but it took roughly about 2 hours. So this was kind of a painful trade to be in. But patience definitely paid. And that was a good winner. It was roughly like 144 points right there. But yeah, called that out right at 9:51 on the Twitter. Took the trade at 9:54. So caught peak bottom, 144 points. Very, very clean trade. So kind of what we saw right here on the PPI move. So if we go back here, all right, PPI isn't as significant as CPI, so the data candle isn't really as big. You can see it's probably only 50, 60 points. Yeah, not even 40 points right there on that data candle. So we took the highs, reclaimed it, came, took the lows. So if you want to be scalping this in the pre-market, sure, go ahead. That's up to you. I just don't think the risk reward there is completely, risk reward is there. But I'm waiting for market open to position myself in any new trades. Just because I'll be looking for that RTH gap if it's still there at market open. If it's not, I'll probably just have to play intraday levels. So now before I get sidetracked with anything else, let's just go over some of the levels on the dollar. Just bring up my notes here. Alrighty, so starting off on the monthly time frame, you can see up here we're on the monthly. Okay, we ended up taking out this major sell side liquidity that I've mentioned in the Discord multiple times, saying that this is a draw of liquidity first. And if we end up breaking this, then we would see this sell side liquidity level here. We didn't end up breaking it. We kind of just wicked it. So wicks do the damage. Wicked it, came back up, and now we're kind of seeing higher highs and higher lows, right? So this candle in specific here, it's a higher high to the previous one, and it's a higher low to the previous one as well. So higher highs, higher lows, and it's just kind of indicating higher prices here. Now for our monthly target, I am expecting us to get all the way up to here. So that's 104.50 roughly, 104.44, 45, whatever you want to call that. Okay, and if we want to drop down to our weekly, you can see this is also the level that I'm looking at, and we have a nice little fair value gap right here. Right, so that would kind of line up with our monthly targets there. And normally when the dollar goes up, equities push down. But lately, just because of all of the news has been releasing lately, they have kind of been correlating, so you can kind of see indices pushing up the same time as the dollar. But normally, in good conditions, whenever the dollar pushes up, equities push down, and vice versa. So seeing that the dollar is pushing up should make me lead to a bearish bias on equities, but that's not really the case as of right now. So they're kind of correlating. But that's kind of the monthly target that I'm looking for. And if we drop down to our daily, we have this nice little swing high here on the daily. And again, we have that weekly fair value gap just resting right above it. And then again, that monthly magnitude or that monthly target that we're looking to take out. So these are kind of the levels that I have on the dollar. If we drop down again to that daily time frame, you can see that we were ranging. So high, low, or sorry, low, high, and then we kind of swept that range and came shooting back up. So if we ever reclaim this range without hitting these daily and monthly targets, then that would cause me to switch to a bearish bias on the dollar. But we're kind of far away from that. So that's kind of a stretch, and we're long ways from doing that. But if things do start to turn around and we do start reclaiming this level here, then I can expect lower prices on the dollar and possibly that sell side liquidity level here. This is a quarterly low. That's why I have this marked out here. So if we go down to the 3-month time frame, which is our quarterly time frame, that is a major sell side liquidity level there. So that's why I have that level marked out. And you can also see just on the dollar, that is a major low here. Or on the daily time frame, that's a major low. So that's only if we end up reclaiming this range again. But again, kind of far away from that. So as of right now, upside on the dollar, which should lead us to a bearish bias on the equities. But let's go over equities now and show you kind of what I'm looking at there. I'm just going to take a quick coffee break. So you can see right here, this is the 1 minute on NASDAQ. We took out the highs, we took out the data lows, all right, reclaimed this fair value gap here. Okay. Should possibly deliver lower and take out that low one more time. And then from there, if we end up taking out that low, I would expect London lows to get swept here, which would be good for us because again, we still have the RTH gap. The lower we drop in pre-market, the better for me because it makes that RTH gap a little bit bigger. And I'll go over what the RTH gap is just in a bit. But again, let's go over some of our levels on NASDAQ. So what do we have here? So monthly time frame. Always go higher time frame to the lowest one. So top down analysis, not bottom to the top. I guess you can kind of consider it. So definitely an inside month, right? And what I mean by an inside month is the high and the low are within the high and the low of the previous month. So this candle right here, that's the month of September, right? And you can see we have our highs and lows there. And the current highs and lows of our October month are within this range. So that's what I mean by it's an inside month or an inside candle. All right. And whenever we have an inside candle, it's a lot of indecision. So again, inside month, but we are closer to taking out our previous month high. So that's what this is right here. PMH, previous month high. We are closer to taking that out, and if we do get that, that'll be good because that could possibly lead us to a bullish bias. This is kind of what I'm looking at here. Now, if we drop down to the week, all right, the week is looking a little bit more bullish to possibly take out this previous month's high. So all these candles are green, right? We don't really see a single red candle in here, and that can again lead us to be a little bit bullish. So this current week, we ended up taking out last week's high. So you can see we basically the entire week, I think up until, I want to say it was Wednesday that we took out last week's high, or previous week's high. It was either Wednesday or yesterday, but I think it was Wednesday. So I think Wednesday we took out last week's high, which led to the bullish price action all the way up possibly to our previous month's high. So for right now, unless this weekly flips red, which we're kind of a ways away from that. Yeah, 150 points, and I doubt that happens today because it's the last day of the week. But for right now, I can say that we're still bullish leading into next week as well, since we took out this previous week's high, and then the target would be this previous month's high. So that would lead us to have higher highs and higher lows on the week. So again, this candle in specific, right, has a higher high than last week and a higher low from last week there. Right, so that can lead us to bullish price action and possibly take out the previous month's high, and then that would lead higher highs and higher lows on the monthly time frame. All right, now if we drop down to the daily time frame, okay, again, this current candle, yesterday's candle in specific, okay, we had higher highs and higher lows, okay, but our current daily candle is an inside candle. All right, and again, it's inside yesterday's range of the highs and lows. So if we end up taking out the low first, you can possibly expect a lower price action. But if we end up taking out this high here, I would expect that previous month's high to hit. Usually Fridays, they're a little bit slower. That's why everyone calls it TGIF. Thank God it's Friday. A little bit slower price action, but because we have news today, we can expect it to be relatively good. So again, if we do end up taking out this high, which was yesterday's high or yesterday's low, you can kind of position yourself accordingly. So obviously if we take out the high, bullish price action. If we take out the low, bearish action. Okay, and this would cause us to give us our sell signal here on the indicator. So this is an indicator that I made similar, or basically going over my whole strategy, coded it into an indicator. All right, so took out the high, right, closed back within this range, right, so it's giving us a sell signal, right, so if we do end up breaking this candle's low, we can expect lower price action, and the targets would obviously be this low right here, and it's kind of a stretch, but could possibly see that low as well. So we are seeing that sell CRT signal right there, which could deliver price a bit lower. Okay. It's just kind of the daily time frame right there. And let's just look at some 4-hour levels here. Yep, so you can see 4-hour signal right there, delivered a bit lower, took it to its magnitude, or in other terms, target. Okay, so sell signal, that's your target right there, and we already delivered. Let's look at our hourly. Hourly is definitely a little bit sideways. I believe this is yesterday's low right here. Yeah. So this is yesterday's low. It's telling us that we're dropping to. Yeah, so we took out that low one more time. So we could get a sweep of our London session now. Let's go back up to the hourly here. So if we do end up taking out London's low, hopefully we take it out right before market open. But if we take out London's low, I would be expecting price to possibly reverse from there to end up filling our RTH gap that I will mention in just a second here. But if we do just start displacing, so if we don't really kind of get like a sweep here, It's kind of just sweeping right back up to reclaim this range. Then I would expect us to kind of just displace all the way down to yesterday's low. And then remember, on the daily time frame analysis, if we end up breaking yesterday's low, excuse me, if we end up breaking yesterday's low, you can expect lower price action. But again, if we do kind of just get that sweep right at market open, so at 9:30, just a kind of a sweep and then reclaim and push higher, I would expect that RTH gap to get filled. Now the RTH gap is just a regular trading hours gap. So you can see right here down at the bottom says ETH, which stands for electronic trading hours, or some people like to call it the extended trading hours. So it takes in pre-market and aftermarket into effect and all of your overnight trading as well. So should hit London lows now. But if you click this, you can see we have regular trading hours. Okay. And basically what this is it's showing yesterday's close. So yesterday's close was 20,423.5. Okay. And it's not going to show you any pre-market or aftermarket levels. Okay. So it's only showing you the levels of where the market closed yesterday and where the market opens. So the market closes at 4 p.m. Eastern Standard Time and opens up at 9:30 in the morning. Okay, so this is for a lot of like your stock traders. So if anyone is, for example, trading the SPY or the TQs and SQs, this is what they're looking at. They're looking at this chart in specific because a lot of brokerages, they don't allow you to trade pre-market or extended trading hours. Okay, and they only allow you to trade regular trading hours. So when they come onto the chart right at 9:30, they see this major gap. And you can see yesterday we had a major RTH gap as well. This is why I was also favoring bullish on top of sweeping the data low and then targeting our data highs, which was this level, right? So we had an RTH gap there. We had data highs resting here. We swept the data low and we filled this RTH gap and then hit the data highs. So it's kind of what I'm looking at today, for example. So I believe, what's our prices at right now? 362. So 362, 362. So roughly down here, right? So the RTH gap is about 60 points. So it's a pretty good gap. Okay. And if the market opens all the way down here, you're going to see this major gap. And again, it's because this is only the regular trading hour, so it doesn't take pre-market and aftermarket into effect. So for example, if we go on to TQs here, all right, again, this is just regular trading hours. Okay, but if we go into extended, all right, you'll kind of see that this looks like the NASDAQ chart in specific. But a lot of traders, what they're looking at is this right here in specific. So the RTH chart. So let's just take yesterday, for example. Okay, so right at 9:30, right here, you can see down here at the bottom, right at 9:30, they just see this massive gap. And if you know how to play gaps, gaps are just big voids within the market that eventually will fill. Okay, just think about it as like damage to the market. So market came, just gave you a nice little fist in the market, put a bunch of damage in the market, and the market just wants to cover itself up, right? It just kind of wants to heal itself up, right? So it's a big damage in the market. Market comes, repaints over it, or covers up the damage. All right, so right now you can see this is our current level at $73.48. So when the market opens up at 9:30, everyone's going to see this massive gap to fill. So that's just a quick lesson on RTH gaps and why I use them. I don't use them every morning, but they are kind of like a good catalyst to gauge where price wants to go. So we're kind of tickling London lows here. Again, I would like a sweep of this level here. I wouldn't really like this higher low. Yeah, S&P is still making higher highs and higher lows to this London session. We'll go over S&P in a bit though. Let's not get sidetracked. Alrighty, so that's kind of what I'm looking at on the monthly, weekly, daily, and the 1 hour as well. So let's see what else we can find here on the 1 hour. Tapped in this fair value gap, pushed higher, took out all this buy side liquidity. Now we're kind of within this range here. giving us sell signals, kind of seeing like an inside 4 hour, which should close at 10 o'clock. Okay. So that should be it for NASDAQ there. I don't think much else. Let me see my notes. So the upside targets, if we do end up breaking this previous month's high, would obviously be this fair value gap here on the daily. So we're on the daily time frame right now, and you can see this fair value gap right here. So if we do end up breaking this previous month's high, because it is bullish PA, if we do end up breaking it, I would expect us to just completely fill this inefficiency here. And then we could possibly target this liquidity level resting up here as well. So this could possibly be a level that we shoot up to. I believe, yeah, it was a weekly level. So this is also just like a weekly high that we can see. So that's kind of what I'm looking at for upside targets. But that's only if we break this previous month's high. Because again, inside month, right? So a lot of indecision. We need to break either the high or the low. I doubt it's going to break the low, but if we do end up breaking the high, it's bullish price action for sure. So those are kind of the levels that I'm looking at for NASDAQ. So let's go over ES a little bit. ES is very similar to NASDAQ. I mean, not much different. We'll start off on the monthly time frame here. So monthly, we do have higher highs and higher lows compared to NASDAQ being an inside month. So S&P is already trading at our all-time highs. And if you watch our video trading at all-time highs, it's basically no man's land because this is the highest point S&P has ever hit in its entire existence, right? So whenever you're in no man's land, it's kind of difficult to trade, in my opinion and from my experience. And you kind of just really have to favor the trend. So because this is a bullish trend, obviously, you don't want to be countering this. Like, we're in no man's land. There's no level of resistance that can verify us turning around. So until you're proven wrong, you just really have to be favoring upside. But let's see here. This could cause NASDAQ as well to kind of play catch up. So because S&P 500 is already trading at all-time highs, this can kind of lead NASDAQ to push up as well and give us those bullish PAs on the monthly, weekly, and daily. But if it doesn't, this is the important part here. So if it doesn't, that will give us a big SMT between the two indices, so S&P and NASDAQ, because S&P is making higher highs, but ES on the monthly, or sorry, NASDAQ on the monthly is making lower highs. So that would give us a bearish SMT here. So you can see from this high all the way down to that low, it's a lower high, right? But on S&P 500, we have a higher high. Okay, so that is a bearish SMT, and we also have a video of what SMTs are in our YouTube playlist as well. So yeah, trading all-time highs, can't really go against this trend until you're proven wrong. That's just our monthly time frame there. Weekly, same thing, higher highs, higher lows, broke above last week's high. I believe again it was Wednesday. The daily time frame, kind of similar to what we are seeing on NASDAQ, but we're kind of seeing two inside days right now. So yesterday we had an inside day, and today we're also having another inside day. This is good, and I'll explain why. So let's mark out this high. So because we have two inside days, let's say this day in specific, so a current day, depending on if this closes inside or not. Okay, so if today ends up taking out yesterday's low, we should really displace for this low right here. Like it'll happen quick. Okay, because it's kind of just like what's an analogy I can use? Kind of just like a spring, like loading up, and you're just pulling it back, just like kind of accumulating a whole bunch of orders, and right when it breaks these lows or highs, it's just going to set off, and it's just going to displace to your magnitude, and magnitude being your target. So as soon as it breaks that low, it's going to really displace all the way down to this low, because it's just accumulating a whole bunch of orders here. Okay, and if it ends up breaking the high, you can obviously expect um, this green candle's high to get swept out. Okay, so that's kind of what I'm looking for right here on the S&P. This is kind of a little bit better than NASDAQ because again, if it ends up breaking the high or low, we will really displace. Um, versus NASDAQ right here, we only have one inside day. Yesterday we made higher highs and higher lows. So although it's the same thing, again, inside day, if it ends up taking out that low, we should displace for this low. If we end up taking out that high, we should displace to these highs right here. But having like two inside days, it's like really setting up those orders, and it's really, pulling that slingshot back, I guess you can say. Just accumulating a whole bunch of orders, and right when it breaks, like it's sending off. Um, so yeah, it's kind of what I'm looking for right there on S&P. We can set our alerts there. Um, it's just super hard to trade inside days, inside weeks, inside months, like whatever inside candle it is on whatever time frame. They're just super hard to trade because on lower time frames, it's just a lot of chop, right? And for those people that like to trade chart patterns, right? What is this? This is a wedge, right? So if we drop down to like a 1 hour, you can see it's like a wedge. Okay, it's kind of wedging up here. So high, low, high, low, high, low. It's just bouncing, right? But again, because it's like that slingshot, everyone knows that if we end up breaking these highs, we should really displace higher. If it ends up breaking these lows, we should displace lower, right? Or it gives us that fake out scenario where it breaks the low, shoots right back, breaks the high, shoots right down. Okay. So again, just accumulating a whole bunch of orders, and it's very hard to trade this because on lower time frames, it's a lot of chop. So what I like to say and what I like to do is whenever you're around support, favor longs. Whenever you're around resistance, favor short. And then if you're ever wrong doing that, it's most likely breaking out. So let's say you go short here, right? So you go short here, you have your targets here, and then you end up proven wrong, comes all the way back up. If you're getting stopped out, that's breaking out of this wedge here. Okay, so it's most likely going to displace higher. That's okay, because now you have true direction. But again, until you're proven wrong, just play the chop. And by playing the chop, you can just play the highs and lows. If you're interested in learning more about that, again, we have a video of trading in a range in the YouTube playlist. So yeah, that's kind of what I'm looking for on S&P 500. Uh, Comparing this to Nasdaq, we're nowhere close to our London session lows here. So you can see right here on Nasdaq, drop down to the 1 minute. Okay. So Nasdaq came relatively close to our London session lows versus S&P 500. Right, we're still a little bit of ways from this. Yeah, it's roughly 10, 11 points. So Nasdaq is closer to our London session lows, which is good because if Nasdaq does break London lows, but S&P doesn't, that'll give us a bullish SMT to again favor the RTH gap for the upside at 9:30 open. So pretty good price action if it gives. But it's just something we're gonna have to be patient on. Um, let's see. Yeah, these are all of our intraday levels there. So we go down to our RTH. Let's see, 372. Yeah, so our TH gap is kind of getting a little bit smaller. So we were at 60 points before, and now we're at 50. Um, but again, if we do end up kind of sweeping that London lows and then coming to take it back up, all right, so from our London low sweep to our RTH gap fill, that's 70 points right there. And on a Friday, that's really good. You don't really get too big of moves on Friday unless it's a news reported day. Just give me 1 second. And just a reminder for anyone watching on YouTube, There is a link in the description for the Discord channel. Um, Feel free to join that. I mean, I know YouTube, their live streams have delays. Um, it's kind of a big delay, I won't lie. I was doing a little bit of testing earlier, and it's almost like a solid 5-10 second delay. And if you're ever watching these live streams live and I'm calling out price action, 5 to 10 seconds is it's a big deal. It's a big delay because price moves quick. So if I'm calling something out and you have that delay there, you're definitely hopping in late. But yeah, that's in the description there. If you want to join, feel free. Okay, so that's really kind of the levels that I'm looking for on the dollar, NASDAQ, and S&P. We'll go over crypto a little bit. Not too much. I mean, for crypto, I usually long term. I don't day trade it like I do with equities. Relatively newer in the crypto space. It's only been 3 years. Has it been? 2000, 2000, 2021, 2022 is when I got into this. I got into futures in 2019. So I have a lot more experience with the futures markets, but we'll go over Bitcoin a little bit. I'm a lot more retail when it comes down to Bitcoin, but we can start here on the daily time frame with BTC. So you can kind of see big flag here. I'm sure everyone has this on their chart, right? Just a nice downward channel. Okay, and we'll start off on the daily time frame here. So we did get a nice sweep of liquidity at these lows, kind of giving us like our CRT setup right there. I don't think it's going to signal this, but this is also a valid CRT, right? Where we sweep this low and could come up to target these highs here. All right, so if we do end up sweeping this high of, I believe it's 62.5, I can expect this high to get swept at 64. And if we do start displacing above this high right here at 64.4, 64.5, it could possibly lead us to a lot higher price action. I know everyone is looking at this level here though in specific, so our 66.5. If we end up breaking that, I can expect Bitcoin and crypto to start trending higher, a lot higher. These are kind of just like my upside targets right there. And if we drop down to the 4 hour here, this does look a little bit better, this sweep of liquidity here. All right, so we got a nice sweep. All right, starting to get a shift above this high and looking to fill all of this inefficiency here to come and take out that daily high right there, which is like our daily CRT setup right there. And again, if we end up breaking above this high, it's good signs for Bitcoin because we could possibly take out this high. And again, if we take out this high, we should end up displacing higher, in my opinion. So just kind of taking it level by level right there. If we do start breaking back below this low, I know it could be a stretch, but it can happen very quick. I would be expecting 55.6 roughly, 55.5, which would be this level here on the daily. I believe it's a weekly level. No, that's our weekly level there. But yeah, I would expect this level here and then possibly down to our flags low. So again, this is kind of like our flag. I would expect this level here. This level here is kind of a reach. So I would expect this one first, possibly look for higher highs or higher lows, I should say, and then possibly look to start trending higher. All right. But again, I mean, this is a painful range. This is definitely a lot of chop, lower highs, lower lows. All right, so until we get some kind of strong higher low, kind of like this right here, and starting seeing higher highs, higher low again, then we can start to favor a little bit more higher prices, I should say. But for right now, just kind of chopping up. So until we start breaking one of these highs, I would say, favor downside when we get up here, and favor upside if we get down here. But that's really it. That's kind of all I'm looking for on BTC. Not too much else. I mean, there's not really much you can work with here. Besides, again, just favoring short up here, favoring long up here until you're proven wrong. So kind of like that trading in a range video that we have there on the YouTube. So that's really kind of the levels that I have for Bitcoin there. Not too much. We'll go over ETH just a little bit. ETH, again, this is all just retail. ETH is like it's a good wedge here. Very, very good wedge play. I'm sure everyone has this on their chart. So if we end up breaking above this high right here at roughly 25.20, then we should start displacing a little bit higher all the way up to the wedge high right there. But we are at the bottom of our wedge, so this would be a level where you want to be favoring long. And then again, if you are wrong in that sense, it's kind of like what I mentioned earlier with S&P 500. Okay, if you are wrong in this sense, you're most likely getting direction, and we could possibly start favoring downside, right? Or we get a nice fake out and we push higher, all right? But that's okay if you end up getting faked out. Again, it just shows true direction in the market. But if we do end up breaking above that 25.20 level, we could end up displacing higher to the top of this wedge. And of course, level by level, if we do end up breaking above this high, we can really start displacing higher. Again, big weekly level here, right? So if we do end up reclaiming this range here, if we do end up reclaiming this range, so this weekly candle, this big red one here, made on that's July 29th, right? If we do end up reclaiming that level, we could possibly displace a lot higher to this level, right? But we would need Bitcoin to really start moving and get out of that painful range that we're looking at. But not too much on crypto. I mean, again, I'm more of a long-term perspective than intraday. And for anyone that does day trade crypto, like, I mean, if you're doing good at it, good for you. I cannot day trade crypto for the life of me. But for anyone that's having a hard time day trading crypto, I'm sure you understand. It's hasn't been the best of conditions lately. So that's kind of what I'm looking for long term on crypto there. Again, not too much, just very simple, taking it level by level. That's all you can really do for a long term perspective right now. These are strong assets, you know, just buy and hold these. But again, that's what I'm looking for on crypto, not too much. So intraday, yeah, it's already kind of slowing down here. You can see, right? Not too much, right? So the best thing to do would be to wait for market open, which we have in roughly 15 minutes or so. Okay, so again, looking at the RTH gap, should be getting it 50, 60 points still, right? But again, I would look for that sweep of our London session to possibly give us that bullish SMT. And again, I have a video of SMT on the YouTube. You can go and watch that. All right, so let's say, I guess, S&P comes down here, creates a higher low, starts seeing higher. But NASDAQ, on the other hand, gives us that lower low at our London session, right? That's a bullish SMT. Or if you use your RSI, right, that's your divergence, your bullish divergence, right? That would lead to bullish price action on our equities, which would be good because, again, we do have the RTH gap that we can come up and fill. But this was good right here. So data highs, data lows, right? Came, swept our data high, then we displaced all the way down to our data lows, right? Came, filled into this fair value gap, right? So this imbalance right here. Nice imbalance, 50% of it, right? And if we ever stay below 50% of a fair value gap, right, you can expect lower price action, right? That's if you're bearish, and if you're bullish, vice versa. So we stayed below 50% and worked lower, right, to possibly take out that London session low. So if you were short up here, right, on the outside candle, right, stop up there. Obviously targeting down there would be your first target. That's a good 3R. And if you wanted to re-add, all right, you can re-add in that fair value gap right there. So you can put your stop just above that fair value gap, nowhere near it, and then you target your London session, right? And that's another 4.5R, which is really good. Again, these are more of like scalping trades. So this is 40 points and another 35 points, right? I like my 100-point trades. This week has been absolutely killer. roughly up 300 points, just a little bit shy of 300. A little roundup for ego's sake. But we have roughly 300 points this week. Monday, no news. That was roughly 50 points. Got closeout break even on the rest. Tuesday, I believe, was that 93-point trade that I shared with you in the Discord. Wednesday, obviously didn't trade because it's day before CPI, but that price action was clean. I wish I traded, but again, you got to stick discipline to your rules. No trading before high impact news. So like CPI, FOMC, those are really the only two. No trading before high impact news. So majority of the times, like 9 times out of 10, it's going to be slow, choppy price action, and you're going to beat yourself up if you're trading. But this Wednesday was super clean. Saw over, I think it was like 130 plus points, at least from where I wanted to enter. And it was a very solid trading day. In the morning in specific, because I don't know if you guys saw the afternoon session, it was very choppy, which again, as expected. But Wednesday we had the FOMC minutes. So it's basically summarizing last FOMC's report. And they were saying that majority was actually favoring a 50 basis point cut at our meeting. But if anyone remembers, expected at that meeting was only 25 basis points. So market expectation was only looking for a 25 basis point cut. But the minutes are now saying that the majority was expecting 50 basis points. So it's just, it's to me, it's kind of funny because it's like everyone, I shouldn't really say everyone, but market expectation was set at 25 basis points. So when we saw 50 basis points, that's better than expected. And if anyone that traded that day remembers, like we dropped super significant in the morning, and right when that report came out, like we beamed higher. Like it was just like textbook trade, like pure manipulation in the morning, just algorithms just getting a whole bunch of good orders, and then we started reversing. Report came out and it just beamed to the highs. But it's funny because it's like that was already priced in. Everyone knew we were going to see a 50 basis point cut, and I knew in specific because looking at the Fed rate monitor tool, which I will show you guys right here. Oops. So our Fed rate monitor tool, you can see this on investing.com. It's just the Fed rate monitor, right? And it shows you what the market sentiment is for our rate cuts. So right now, 83.9% is again expecting a 50 basis point cut at our next meeting in November, and only 25 basis points are set at 16.1%. So again, remember, like I told you, market expectation was set at 25 basis points, but this Fed rate monitor showed everyone was favoring 50 basis points. So it was just kind of funny to me, like why was market expectation set at 25 basis points? Was it kind of just like, manipulating people, or just manipulating the whole report in itself to make it seem like it's better than expected, right? And it's not what people expected, right? But I'm sure everyone knew that we're going to have 50 basis points. Like it didn't come to me as a surprise. So when I saw the market just absolutely dying in the morning, I was like, okay, continue to sell off as much as you want because I know this is just going to V at the end. And it was good. It was like 300 points just in that one day. Like it was ridiculous, insane. Yeah, it was funny when I saw that report yesterday, or not yesterday, Wednesday. Yeah, it was funny. But yeah, we're 5 minutes away from market open right now. Again, you already know what I'm looking for. Sweep of London lows, target that RTH gap. Again, if we do, let me go over here. If we don't get a sweep, right? I believe it was the 1 hour. Yeah. So if we don't get a sweep at this 1 hour low, which is also our London session low, so if we don't get a sweep and reclaim of the range, and we end up just displacing we could very much see yesterday's low. And then again, recap if you remember, right? If we end up breaking yesterday's low, not really good, right? Because now we're seeing lower highs and lower lows. So current candle, it's a lower high, right? And if we end up breaking yesterday's low, right, that's a lower low. So downside sentiment, right? And vice versa, right? If we do end up pushing to the highs and breaking this high, right, those are higher highs and higher lows. So it's a bullish sentiment, okay? And we can expect that previous month's high to hit. So it's kind of what I'm looking for on NASDAQ. For those that don't know, I only trade the NASDAQ. I don't really trade S&P, but I do watch the S&P 500, and I like to gauge my trades on the S&P, but I do trade the NASDAQ in specific. Right. But again, those are kind of the levels that I'm looking for right there. So again, I will say this, we do have a full CPI breakdown, how to read the CPI report and really get a full understanding of what was released on the YouTube. Again, that is in the Feeding Investments Intermediate Trading course. You can find that in the playlist on our channel. I believe it's the last video of the playlist, and that gives you a full video on how to read that CPI report and see what items were affected and what. So that's good. We got our break of our London lows right before market open. All right, so we can see if this really just wants to displace for yesterday's low, right? Or give us a nice sweep and come and target that RTH gap. Right. Again, I mean, you can say that we're bearish today just because of the report. For those that maybe joined late, the report did come in higher than expected, which I can show here again. Right, so expected was 1.6%, previous was 1.7, and then we released at 1.8. Even core as well. Core came in higher than expected and higher than previous, right? So we want to see lower than expected and lower than previous for it to be good news. So the fact that it came in higher is not really the best of news. Also considering that CPI yesterday came in higher than expected. But CPI wasn't as bad as this because it did come in lower than previous. All right. So market open is in about 2 minutes, right? So if we do want to continue to displace right at market open, you can really expect yesterday's low to get swept there. All right. I'll wait with you guys until market open and then we will call it there. Does anyone have any questions at all? You guys can feel free to use the live chat. I'll type hello. Feel free to use that chat if you're in the Discord. Oh, YouTube. Yeah, no, nothing. So if you guys have any questions, feel free to let me know. Got about a minute left here. But if not, today was a good live stream. Just went over a few different things here. And again, those are the levels that I'm looking for NASDAQ. So if we do end up reclaiming this range here, that'll be really good. And we start favoring higher there. Appreciate it. Anytime, brother. I appreciate everyone that joined. Again, if you want to see more of these, I mean, feel free to react or even just request it. I was honestly expecting a lot more people to join just because of the interactions that we got on the update. But that's okay. That's okay. They're probably still snoozing away. It's probably too early for them. But it's only my grinders that are up right now. So again, I appreciate all of you guys that have joined today and have stuck around from start till finish. I really do appreciate it. Yeah, again, these are the levels that I'm kind of looking for. So 1 more minute. Actually, I lied. This is market open here. So that's it for me today. Again, everyone knows what I'm looking for today. This video will be up on YouTube if you want to watch it back. It looks like we are displacing to yesterday's low. But again, yep, that's it from me today. Hope you guys have a great rest of your day and a great trading day. And I will see you guys when I see you. Peace out, everyone.